In this video, I want to go into basically explanations of, or say definitions of what different types of loans are. You come across a lot of individuals on YouTube that only talk about merchant cash advances or term loans, but you rarely hear, or equipment financing, you rarely hear about any of the other type of loans. Okay, you know, it's great to be part of a company, or at least an industry that provides different type of loans, because maybe your company only provides one type of loan and they may not be approved for that particular type of loan, but they may possibly be approved for a different type of loan. Okay, so you're going to have, you know, customers or potential clients come into your business, or to give you a phone call or email you just to ask you, hey, what do you think, you know, or just maybe they want you to explain what those particular type of loans are. And with, you know, funding companies and lenders, they should be able to explain to you, you know what, you know, loan is best for your business. So in this video, I just want to explain to you the different type of loans so you can better explain it, and just for your own knowledge. Okay, so one that you never really hear about is vendor credit. So I want to tell you what that is. Now, vendor credit, okay, vendor credit is credit extended to your business of, you know, net 30 or net 60-day terms, or even often in forms of credit lines to your business. Okay, vendor credit allows you to purchase products and services they offer on a deferred payment structure. This type of financing can be used as a revolving credit line, you know, for products and services that your business needs, thereby easing cash flow. Okay, merchant cash advances, better known as MCAs. I'm sure everybody already knows what this is, but if you are one of the individuals that do not, I will explain. Okay, when you need to raise capital for your business, okay, small business most likely, all right, and you need to raise it quickly, okay, a merchant cash advance, better known as an MCA, can be a shortcut to funding. A merchant cash advance is a convenient option for growing your business and sustaining cash flow. Okay, now, traditional financing, again, a lot of you know what this is, but I'm going to explain to you what it is. Now, when you think of traditional financing, you think of what? Bank loans, term loans, SBA loans, and whatnot. Okay, and I'm going to go into detail of what an SBA and what a term loan is. But basically, traditional financing, okay, is funding through traditional financing, all right? Traditional financing options will be composed of local and community lending institutions. They follow the traditional underlying criteria and are more for established business owners or businesses 2 years, you know, that are over 2 years in business. Okay, they don't really typically help you with if you just started. You know, they're not really interested in that. They traditional financing, they look for established businesses that have been in business for years to come. Okay, because they like building relationships and they don't want to waste their time. All right. Microloans, definitely one that you don't hear about. It's rare that you even go anywhere to hear about a microloan, but I'm here to tell you exactly what it is. Okay, now microloans. The microloan program, okay, provides small, short-term loans to small businesses, concerns, all right, and certain type of non-for-profit child care centers. Okay, microloans at 1,000 to 50,000. All right. Due to the economy, many entrepreneurs and small business owners have been looking for other financing programs outside of the traditional funding sources banking model. The microloan program provided in our database provides small, short-term loans to small business owners. All right. Now, investors. All right. Now, many entrepreneurs finance startup companies using investment capital. Investment capital usually comes in two forms: angel investment and venture capital investment. Angel investors and venture capitalists seek investments in promising startups and emerging technologies. All right. This form of investment is commonly referred to as private equity investments. All right. And now I'm going to explain to you, okay, more types, okay, of different loans. All right. Now, business lines of credit or credit line or credit lines is an arrangement or commitment by a bank or creditor with a customer. That agreement specifies an amount that the customer can borrow or use in the future, assuming that the customer's financial conditions are maintained. Term loans. Term loans are monetary loans that is repaid in regular payments over a set period of time. So, for example, it could be the 15th of every month, the 1st of every month, the ending of every week, okay, the beginning of every week, right? Term loans usually last, between 1 year to up to 10 years, but, may last as long as 30 years in some cases, okay? SBA loans, okay? SBA loans are loans that are backed by the Small Business Association, but administered through participating banks and lenders. The maximum amount a business can borrow of an SBA loan is $5 million. Unsecured lines of credit is usually the perfect vehicle for any growing business to make sure you have payroll on time, pay your vendors on time, or increase marketing to bring in more business, okay? Equipment financing is a very common tool used by thousands of companies as part of a business recovery program, as it can help improve cash flow and working capital. It's a lender giving a business finance, all right, that is secured basically, based off of the equipment, okay? So, just giving you a little bit of knowledge here based off of, what type of loan am I qualified for? What are these type of loans, okay? Because, you're going to run into these questions, if you're a loan consultant or a new loan consultant or, whatnot, you're going to run into these questions, and it's just great to be knowledgeable, than the next person to know more about these loans, okay? Because this also can differentiate between you actually getting a business, into your book. You want to have your own book of business, right? So while you're building your book of business, or you're building your pipeline or your CRM, it's just good to have, notes handy, or it's great to just educate yourself when you have spare time on the different type of loans. Because again, one business may not be qualified for a term loan. Maybe they're qualified for an MCA. Maybe they're not qualified for an MCA. Maybe they need a business lines of credit. By building their business lines of credit, then they can get qualified for a term loan. Maybe they don't need that, right? Maybe they need a different type of loan, okay? Maybe they need one for startup. Maybe they want equipment financing, but they were asking about an MCA. It's great to understand these different type of loan options, different type of loans, so then you can come to a conclusion and determine which one is best for your client. I want to thank you guys for taking the time to watching this video. Take care, and as always, God bless you. I love you.